Alright guys, welcome back to another video. This is Daniel with Leyyon Investments, and today what I want to do is cover a couple of stocks, one of them being CRM, Salesforce, and the second being Walmart, ticker symbol WMT. If you guys don't follow me on Twitter, I post all of the stock charts and technical analysis and reasoning behind specific trades as I come across them. So you can give me a follow. My link is in the description. And if you like this video and find it helpful, please like and subscribe as it will help the channel grow and reach more people. All right, let's get into it. So let's get into CRM, Yahoo Finance. So currently the price for CRM is at $197.51. The stock went down 0.71%, $1.41. And after hours, the stock has gone up 0.20% or 39 cents. The PE ratio, which is a metric I use to find how overvalued or undervalued a stock is compared to the earnings of the company, is currently at 897.77 for CRM, which is extremely overvalued. The stock's at 197.51. So, taking that into account, we'll move forward to the technical analysis aspect of this. So, on the daily chart, which each candle represents 1 day of price action. So, in this case, this price has gone down on this given day, right, from the open of 193. So, in the daily chart, we see a potential double top forming. If we zoom out, we can see that the stock has been downtrending and recently has broken out of its downtrend, tested its support. So here's the downtrend, right? Broke out of the downtrend, meaning the breakout happens when now we're creating a higher high, right? Because here we have a lower high, right? And a lower high. Here now we have a higher high from the previous high. It came down to test support at the 200-day simple moving average, which is right near this support, or excuse me, this resistance level right here, where price was being rejected and then downtrended from there. Once it tested its support, it continued to rally upwards and now is testing a previous support level where we see that prices were being supported here and now prices are being rejected here. So now this becomes a resistance level that we're watching. Now, what can we see here also? So we also see a price gap at around $169 per share. And price gaps usually tend to get filled. They don't necessarily have to, but it's a good indication to see where the stock may head short term. Now, if we go to the 1 hour chart, we can see a bit more of the intraday price action. So when that rally happened, we saw a price gap at 169, which I pointed earlier. Here we see another price gap at 178. And we see here a bearish head and shoulders pattern, where this is the first shoulder, comes down, price comes down to test the support level. Here we see the head, which is higher than this left shoulder, comes down to test the support level, bounces up, and makes another shoulder around the same level that the first shoulder was at. So now this serves as a support level, or something we call the neckline for the head and shoulders pattern. Here on this candle, it broke right through the support level, and what happened? We saw that the price retraced back up to test this area of what is now resistance, what was previously support, and then continued to sell off to then test the 200-day simple moving average as support. Couldn't break above the 20-day simple moving average and headed lower, where we found support where this resistance was, where this resistance level was. After that, price rallied higher to then test this resistance level once again. So we see a double top forming here, a potential double top forming. I would want to see the price break below this support level like it did back here. And by doing so, we may actually break below this 200-day simple moving average. If this happens, we may get across a bearish crossover of the 20-day and 50-day simple moving average, which will be another bearish indication that will form as price unfolds, and we may make a lower low. This is the low. We may make another lower low here to find our first price target at 178 and our second at 169. If we take a look at the daily chart, we can see that 169 is near the 200-day moving average and near this support, this resistance level, which now becomes support, as we saw here also, where the price retraced back down to the support and continued its rally higher. Moreover, I want to get into what the insiders are doing. So let's go back to the other window, CRM. So CRM, we see that Harris Parker, this co-founder and CTO, has been selling his shares in the month of April. He has also been selling his shares one time in the month of March. And then we also see other insiders selling their shares, selling their shares. So, considering these factors, I think it's safe to assume that the price of CRM is overvalued and there is a price retracement that should occur in the near future. Based off of technical and fundamental analysis, this is what I would have to conclude. Buying a put option up here may be a good and wise decision to have the option to sell CRM shares at 200 or 190, depending on what strike you choose, in the future, when maybe the price of CRM may be at 165, 169 sometime in the future. We'll have to see what happens to CRM, but based off of this technical analysis and fundamental analysis, I think it's good to be on the bearish side for CRM. If you found value in this video, please like this video and subscribe to the channel. And if you want to contact me directly, you'll find my contact details in the description, my phone number, and as well as my email, and as well as my Twitter profile link. All right, guys, have a good rest of your night.